Before it's too late is the theme of today's presentation. It will be very thought-provoking for most of you. As we've talked about in recent market updates, we are in extraordinary times. Hey, there's nothing new about that, but you need to get off the fence before it's too late. Time is not on your side. Let me explain. There are three things that are different now of concern. First, while there's record activity, much of it is bolt-ons, which are companies acquired by PE platform companies with mega financing. They are part of a market consolidation strategy. Is your market being consolidated? The second is the emergence of generative AI technology, chatbots, a technology paradigm affecting everyone. Software and related tech firms are literally pivoting overnight. It's great if you're a market leader ready to surf this trend, but this wave can break on you. An example of the wave breaking on you, recently a tech CEO, their largest partner being Salesforce, was devastated to learn that by implementing AI tools, Salesforce could duplicate his technology. The third major concern is the global economy and related stock market. Just look at some of these headlines. Look, markets run in cycles. We all know people who missed the window, fell victim to the dot-com market collapse or the financial meltdown of '08. Today, after effectively a 17-year bull market, with only a few blips due to COVID, the headlines are calling for a big correction. When a market turns, it can be ugly. You lose 40% of your value in just the first 6 months. Half the buyers disappear, and it gets worse. You may not even be able to sell at all. On average, it takes 7 years for values to fully recover. Do you have that much time if you're a baby boomer? No, you don't. Then there's life itself. Sometimes you see wealth go up in smoke. Two friends I'd met through our conferences, one in Denver, one in Munich, died unexpectedly. Worth over $80 million between them, their companies weren't saleable without them. Their wives ended up with nothing. Don't let that happen to you. And it doesn't have to be death. Another friend who was always going to sell next year, right? Thought his family would take over. He learned after he had a serious stroke that his kids didn't want the business at all. So much for his succession plan. Now what? Wait for the grandchildren to grow up? Nope. Less than 1% of tech companies make it to that third generation. Here are a few more examples. We work with a founder who had market-leading technology. He turned down a $120 million offer to buy his business just a few years ago. Short time later, he was replaced by open source developed by Google, Amazon, Facebook, and others. Now, the company is unsaleable. Don't let that happen to you. Here's an overseas example. With Trump deregulation of ESG, a founder has seen his market collapse overnight as corporations have pulled back revenue in this space. His window to sell is in jeopardy. And one last one, closer to home, from California. An ag tech company preparing to go to market was devastated by the recent wildfires. Their market were orchard clients. They were burned. They had to cancel their contracts. They will have to wait for the trees to grow back before they can go to market. So, just to be safe, if you're a boomer thinking about calibrating this market, see what you're worth. We've just had the best value increases in the last 3 years, with lots of new buyers flush with cash, making multiple offers on companies. With a professional global search, the worst that can happen is you will tune your business model, refine your market position, get great market feedback, and open up many business doors, all while seeking that recapitalization or acquisition offer that can really set your family up. Any one of these benefits justifies the time and expense of a full global partner search. Lastly, calibrate the market now before it's too late.